Good evening. Ira Epstein of Linn & Associates with your SPDR ETF video, and this is for Monday evening, and this is November 2nd, 2020. Wow. So tomorrow's the election, and here's the best news that you can imagine. I'll give you the secret. We're finally done with the ads. I'm tired of the ads. You know, the local ads, they play 24 hours a day. I think you know that. The presidential ads, not as much, at least not in the Chicagoland area, but these local ads are wearing me out. Trying to make heads or tails out of fundamentals right now, why are you doing it? It's not going to matter. Earnings don't matter. We've got the big issue in front of us. Two issues, actually. You've had the COVID-19, but it takes a back seat right now to the presidential and the Senate outcome. Those are going to be what the markets look at. I think you understand that big cities in America, the New Yorks, the Chicago, probably the Oregon areas, could be LA again, could be Miami again. You get areas in this that if there's a Trump win, the Democrats will likely riot and loot. If the Republicans lose, I doubt that we get any of that. It just hasn't been how it's worked in the past. And no, I am not saying that the Democrats are always the looters and rioters, but those seem to be going hand in hand with what's gone on with the Black Lives Matter more than the Republicans doing that. I'm just telling you what I see, not what I believe in. So we'll see what happens there. That's going to be very important. So if we get the riots in the street, you got to deal with that. When do you think we're going to get election results? I can understand we're probably going to get a lot of preliminary results, but I don't think we're going to get finals until the votes are counted, and we have more votes mailed in America than at any time ever. You got to get them counted. They don't all get counted tomorrow night, and some of the big outcome states don't know. So this is more of a marathon, in my opinion, than it is a sprint. Be ready for that. When we take a look at XLK, the thinking has been going that Joe Biden, as a winner, would not be a friend to technology stocks. And they have been selling off in anticipation of a win. Doesn't mean he's going to win. If he loses, you probably get a big pop back in the market. If it stays like this and you can get through these levels, it gets even more treacherous to the downside. We've got to see who wins. These circles are gaps in the chart. Gaps like to get filled. Do they have to be? No, but they like to be. So I'm looking at a gap up between here and here. Keep that in the back of your mind. It's over the 115 area, if you can get a bounce. What's the trend? It's down. You've had a pattern of lower highs, lower lows, and that began back here in early September, and it's continued right on through, right? In terms of where the market pausing, well, it's a combination of the 100-day moving average, where, as I told you before, there's a group of traders that say, hey, we have been over major moving averages forever. You know, whatever the word forever means, but it's a long time, right? And on the first challenge of those averages, I, being the investor, like to own that market to see if it's going to get its footing there. It's a concept trade. It is not necessarily a smart technical trade, but it is one that I've seen people employ. When I look at the Bollinger Band, the combination of that, the market will stay within these bands 95% of the time. The combination of the 100 and that is a support area. I realize that everything is off the table with the election, but it won't change the chart patterns. You're going to look back at the chart patterns and say, gee, that chart pattern still made sense. I've seen that too often. It's the volatility, not the pattern. Can you withstand this market, for example, if it moves up 8% in a day or drops 8%? That's what you can't handle. Doesn't mean the chart patterns aren't there. This is an oversold market in a downtrend that has hit downside targets, and it's still in the downtrend. In SMH, it is the same thing. You've been in a downtrend. You went to the lower Bollinger Band. You ran into a, if you will, a support zone that the market doesn't want to get through. It's fighting there. Take out 179.51 and you neutralize the downtrend, but I don't see anything just yet that can start an uptrend. If it wants to go down further, well, the 100-day average is waiting for it. In XLI, the industrial sector, you're still very much in a downtrend, but you've hit, just like we did in XLK, big support area. That 100-day average in the Bollinger Band attracts that type of person that I said, and it also, for somebody that is short, is a major area for them to be lifting money out of the market. Momentum turning up. Momentum often turns before the market turns. In XLE, we have had a pattern of a higher high and a lower low with a failed breakout attempt. Now, what do I mean by that? Do you disagree that we were just drifting sideways? Market gets a breakout. I define a valid breakout, and they don't all work, I want to make that clear, but I define a valid one as a market that closes outside of the number in the bottom quadrant of the market, the bottom 25%. Got that? The next day, you don't do that. It's not a valid move. Now you're just fighting at the lower Bollinger Band, still with a higher high, lower low, and an oversold market that's trying to correct. In QQQ, if we come back here, just like this. If you're in a downtrend, what's the objective? Well, certainly the lower Bollinger Band if it's going to reach down. Now with an outside day down, you don't want to get over that day's high. You come down. I think the pros began taking money, and this was last Wednesday, and I'm certain I said it here. Then the market gave you a bounce, and I didn't do an update on Friday. You know, sometimes I just don't do them. I do them for my subscribers. People that pay me, they get these updates. They're weekend updates, the whole thing. But sometimes for the free people, I want them to miss me. I want them to become a subscriber so they get the whole package. And here you are. Now you're into the support zone and you're fighting there right now in an oversold market. The emerging markets, they went down to the 200-day average. So I had told you back here that I thought that there was a lot of buying by the pros right there. Admittedly, you did get to an upper Bollinger Band. Now, these are the people that buy moving averages. I don't think they fight Bollinger Bands. You're not going to beat the Bollinger Band. It's only going to stay out of it 5% of the time, and if it's sideways, you even have a worse scenario. Now the market falls back, and I think those same people began buying here, and I think their gift day was Wednesday when the market got like that, and now they're going, that looks pretty good. I'm not one of those type traders. I see a downtrend with a bounce in an oversold market. That are both numbers under 20? They are. Are both numbers under 20 on Friday? They are. Were they on Thursday? No. Oversold market. Tomorrow's an important day, but we know tomorrow's important because of the election. In GLD, we've been coming with a market with a higher high, lower low. That 100-day average is very much in play for those bulls that think that a Biden win is very inflationary and that's where they want to own the gold market and they're going to close their eyes and hold it. I believe that. We'll see if that works for them or not. It's not the way that I do charting, but I understand what they're doing. GDX is still in a downtrend, but you hit your downside targets, the Bollinger Band, you're rallying, you're still in oversold territory, which tells me you're not going to attract sellers while either of those numbers have a reading under 30. Resistance I see at 39.53 to 16. You have to get over 40.41 to break the chart pattern. TLT, you're still in a bear campaign here. You have lower highs, lower lows. Each time you've hit the Bollinger Band, the market's rallied. Now, this is an interesting market. We have been staying over that 200-day average for a long period of time. It's changing. Suddenly, while the market held here, it offered resistance on the first challenge up there. I think the market will decide with this election, it either gets back over that on, let's call that the Trump win, or it stays under it under the Biden win. We'll see if I'm right or wrong. But that's where I think you're at on this trade. In the euro currency, still very much in a downtrend. Why? Duh, COVID. All the numbers looked so good in Europe until France, Germany, the UK now, parts of Switzerland. I can go on and on. Spain. These are shut-ins, 30-day shut-ins or more. They're talking in the UK, they may go to January. Whoa. That weighs on these markets. It's that simple. So you put it together, you get a game plan, and you try to figure out what to do. Tomorrow, the people that are going to trade aggressively are probably the QQQ, SPY people, and they'll be in and out of the markets. One technique for day trading is pivot points. If you know nothing about them, we have a free three video series that teaches you the formula, what they are, how to put them on a chart. Most charting services have this built into them. The idea behind it, I explain the philosophy in both PowerPoint and using real charts so that you learn what it is. And then I teach you how to take the market and use the resistance and support zones with slow stochastics, because often momentum turns before the price turns. It's free. You got nothing to lose, right? All you need to do is go to our website under free offers, click it. My staff will get it out to you right away. You'll be viewing it tomorrow. I'm Ira Epstein. Should be an interesting couple of days. Take care.